Brian Grimes, your real estate mentor, back with another action-packed Q&A. So we're here to answer your questions, right? I've compiled the questions that I've gotten from you guys over the last couple of weeks, and we're going to go through some of those. If you have new questions, make sure you drop them in the comment section so that we can answer them live. And stick around to the end because you don't want to miss out on valuable information from somebody else's questions, or maybe from your own question, right? Stick around to the end so you can learn everything in this session and accelerate yourself. If you're new to the channel, like, comment, subscribe. Leave the comment that says, I subscribe. For everyone who leaves that comment, I'm going to send you instant access to my free real estate training. It'll show you how to acquire properties for pennies on the dollar all across the country. Don't want to miss out on that free offer. Joel says, I'm here to learn, so welcome to the platform. So let's dive in. Before we get into the questions, though, I want to talk about just a general market update. So, and this is super general, but if you guys have been paying attention, we're seeing banks are failing. So there are some banks that are failing right now, that have failed, that have just gotten bailed out by the Fed. And there's a reason for that. We'll get to that. But they've gotten bailed out. And there are other banks that are kind of on a watch list where they might fail and get bailed out. And the reason that they've been failing, a lot of us don't know this, but banks will take their excess funds and they will park this capital in bonds. Some of these bonds are 10-year bonds. 7-year bonds, 8-year bonds. But what happens is when rates go up substantially, like they have, this was kind of unforeseen for the Fed to just start hiking like every 1 or 2 months, 75 basis points, and they're just bumping up rates. The value of these bonds is going way down. And there's a way to mark to market, and there's a way to have like a book value. And when you have the book value, it kind of looks fine. But if they hold these bonds to term, they're losing like billions of dollars and hundreds of billions of dollars. So we just had a bank lose like, 150 billion. And they had to get bailed out by the Fed. Mortgage rates are down today because of this. And I'll get to why rates are down in response to this and why this could actually be a good thing for us. But the Fed stepped in to bail out this bank, Silicon Valley Bank. And they stepped in to bail them out because the Fed caused it. The Fed caused the bank's failure by just jacking up rates with no consideration for the fact that banks are going to be negatively impacted by this activity. Why is this good for us? It's good because the Fed is now thinking, one, they had to step up and really use our taxpayer dollars to bail out this bank. But two, they're now thinking that, hey, maybe we can't just keep jacking rates as our way out of inflation or whatever we're dealing with, whatever economic forces we're dealing with. Maybe we have to be a bit more sensitive now, because now they have to think, if they just keep jacking rates and they don't provide solutions, other forms of liquidity for these banks out there, more banks could fail. That creates mass panic, and that is even worse for the economy. So they have to choose a lesser of two evils. And what I would anticipate is that the Fed rate hikes are going to decrease a bit. They're going to slow down. They're going to about face even. I read something that said rates may go back down to zero or like negative from a Fed fund rate type of standpoint. So we'll keep an eye on it. But I think this is good that there's some pain in the market on the banking side from just jacking up rates. So now there has to be more sensitivity. There's probably going to be a pullback in rates or a about face much sooner, definitely towards the end of this year. And we're already seeing rates have fallen about 20 basis points today in response to that. So kind of over the weekend. And I would anticipate that rates will continue to fall throughout the week as this happens. So that's some, a bit of good news for us. And I just wanted to touch on that. Rates are down right now. They're going to continue to go up, down, left, right, sideways. But I don't think they're going to get higher than the peak that we saw in last October. So this is a time where you want to keep your eye on the market, you want to keep your eye on the ball, and you want to make sure that you're in a position to invest. Guys, if you're new to the channel, like, comment, subscribe. Leave the comment that says I subscribe, so that I can send you that free training that'll show you how to acquire properties for pennies on the dollar all across the country. You don't want to miss out on a free offer. Drop your questions in the comment section so that we can answer them live. I'm going to dive into the Q&A, which, once again, these are your questions that I've compiled throughout the week. So the first question we got is, how do property liens work? And can I close on a property that has an uncleared lien? So let me address some of this in reverse. What is a lien, and then an uncleared lien. So a lien would be anything that goes against this property that needs to be paid off for this property to be transferred free and clear. So what are some things that could show up as liens? Tax bills, IRS bills. If you owe money to the IRS and you don't pay them, technically they could put a lien on your person. And then if you own your property personally, that lien could be attached to your personal property. So the IRS has the ability to do that. Also, a municipality will have the ability to do things like, if you don't pay your water bill, the water utility, because it's public, it's lienable. So they can put a lien on your property for the value of the unpaid water bill. The same thing for your property taxes. They can put a lien on your property for that. If you don't pay a mortgage, they can put a lien on that. So there are all these different things. Like if you don't pay different bills or you don't register your property, there's different city fees, they can put a lien on your asset. So then when you go to transfer that, where you go to sell the property, you have to pay off those liens in order to transfer that property free and clear. So how do liens work? They work from a seniority standpoint. So some liens are senior or junior to other liens. So the city, the municipal liens, the IRS is senior. Then there's like the municipal liens, and these are all kind of within that senior bucket. This would be your water bills, your property taxes, they're senior. The mortgage is actually junior to the IRS and to the city liens, to the municipal liens, which means if you don't pay your property taxes, your property could be put up for a tax sale. They will auction off your property for the value of the taxes. And because that lien is senior to all junior liens, it will wipe out all the junior liens if that property is auctioned off and essentially foreclosed on for that senior lien. This is why if you if you own a property, and some of you do, they will have you escrow the property taxes, and then they will pay the taxes. Even if you don't pay the mortgage, your lender will continue to pay the property taxes, or whoever's servicing that debt. Why are they doing that? Because they don't want that property to get sold off at a tax sale for that senior lien, because it will wipe out their position on the property. They will still have a judgment against you personally, but they can't attach it to the asset. The asset they know is worth more than potentially you personally, right? So that is generally, I go kind of a mile deep into this in the 100 Keys Masterclass. There's also some other videos on the YouTube channel where I go a little bit deeper into this that you guys can tap into. But that's generally how, liens will work. And, can you close on a property that has an uncleared lien? The answer is actually yes. You shouldn't do it as a rule of thumb, but there are ways where you can, like, if there's a past due water bill, like I've had situations where, I want to close on this deal, but the property did not have a water meter on it. So the water's just kind of running. Maybe like a pipe was burst. So the water's running, but the city has no idea how much water was used until they put the new meter on and then kind of backtrack it. So it takes 2 months to get a water meter on, and I want to close today. What do? You can escrow money. So I can say, well, in general, depending on the time period, let's say the last meter reading was 2 years ago, and there's been 2 years since there's been a meter on this property. Somebody broke in and stole the meter, which happens, believe it or not. So I can pretty much escrow money and say, well, I can assume the water bill would be no more than $3,000 a year, even if the water was running. So escrow $6,000 until we get the new meter in place and get the reading. If we get the reading and it's less than $6,000, we'll just take whatever money out of the escrow and then release the rest to the seller. So you can do some type of escrow to get a deal done quickly. That's kind of advanced stuff. But for some of you, you might run into the situation, especially if you start to operate at volume, like we talk about in the 100 Keys Masterclass. If you're not going to see this doing 1 deal or 2 deals a year, typically. But if you start doing 10, 15, 20 deals a year, eventually you're going to run into this. Because only, I would say about 1/4 of deals will get caught up in title, meaning they can't come out of that, free and clear. The deal's going to die, at the closing table. It's going to die in title work because some lien is going to get discovered. Maybe there's some chain of ownership that gets discovered that you didn't know about. And or this person, the seller, thought, oh, I only had one mortgage, and then they found out, oh, my uncle took another mortgage out, and now I owe 150,000 on it. I'm underwater. So a lot of this stuff will happen. The longer you're in the game, the more you'll see. Let's see we have some comments coming through. Keep dropping your questions in the comment section so that we can answer them as they come. And like, comment, subscribe. Leave the comment that says I subscribe so I can send you that free training. So the Fed don't have a chance. This is from Kevin. Fed don't have a choice but to raise the interest rates to get a hold of inflation, which I'll comment on. People will stop spending money. Unfortunately, this leads to job loss and business closings. They don't really have a choice. I mean, but in all fairness, it's not about raising rates. It's about the speed of raising those rates. Like, to double the rates, think about your mortgage. Like, I think this might be the only time in history where rates have doubled this quickly, going from 3 to 6%, boom, overnight, 7% overnight. That hasn't really happened before. And the problem with the Fed is they're doing things, but they're kind of playing house a bit. Like, they don't really know what's going to happen. And they're not thinking from a critical standpoint, like, hey, the banks are going to fail. I mean, these people, here's what we have to understand about how the government works and how the Fed works in this sense. They are not proactive. They are reactive. So they're just like, we want to get a hold of inflation, so we're just going to bang up rates and then see what happens. That's not being proactive. That's just kind of taking an action and waiting for something to happen and then reacting to that. So they did it, and then the banks started failing. I mean, massively. They came in, to put this in perspective, the FDIC insures up to $250,000 per account. They went above and beyond that. They went and said, we're going to bail out this entire bank, even well above and beyond the FDIC. So if an account had 150 million in it, we're going to insure the FDIC, the $250,000, and everything above that with essentially taxpayer dollars, right? And they're printing more money to do this. So then you have to ask yourself, we have to get a hold of inflation by raising rates because we printed too much money in the past, and that, which was really, all the stimulus packages from the shutdowns. That's what kind of pumped more money, and they're trying to dry it out and pull that money back, right? But then they cause $150 billion ball drop, and how do they get that money recovered? They print more money. Won't that lead to more inflation? So it's not necessarily the right solution. So I'm not saying they can't do anything. They do have to get a hold of inflation, but there has to be some type of sensitivity here and some understanding of how this stuff works in reality, not the vacuum, because they're just doing it in a vacuum. I'm saying, well, according to the, economics book XYZ, but we have to get this thing under control. So it's a mess. It's a mess. Let's go to Mr. Weeks, Adam Weeks. Thanks for tapping in. They'll raise rates 50 bips, 50 points, and they will. They have to in order to create more certainty. Otherwise, they look like they didn't see this coming. Well, I think the cart's before the horse there. They definitely didn't see this coming. Or if they did, it's kind of tough to think about it because, and I'm sorry we're getting off into tangents. I know we want to talk real estate, but this is very related. But it's tough because if they did foresee this coming for specifically banks like Silicon Valley Bank, and then we're going in and we're bailing out hedge funds, essentially. We're going in and we're not bailing out, mom and pop who lost their money at the bank. We're bailing out multi-billion-dollar hedge funds with taxpayer money. So it's a bit sinister in that sense because it's like, man, they caused this massive issue that they could have foreseen, and now they're bailing out pretty much wealthy investors and hedge funds and venture capitalists with taxpayer dollars, with mom and pop's money. So it's really weird. It's really weird. But they are going to continue to raise rates a little bit, 50 bips, 25 bips, but then they're going to have to ease off the gas because this did not go away. This was not just micro, like, oh, just this bank or a couple of banks are exposed. All of the banks are exposed to various degrees. Some just have more capital than others. And this one was super exposed because of the nature of their business and the size of their deposits on it from an individual. Because they're dealing with venture capitalists, they have a bunch of people with 150 million versus some of the other banks that will have many small accounts that are FDIC insured. Here's a real estate question. Should you gut rehab an old house if you don't need to under 200K? Is there any time you wouldn't immediately rehab? From Roland. It's a good question. So look, you don't have to gut rehab everything, even though I'm kind of Mr. Gut rehab everything. So, but you don't have to. It's a mindset. So, and this is kind of more of like real estate philosophy, I'll call it, because there's no right answer, but there is a wrong answer, interestingly enough. So when I look at a property, it's all goals driven. So is my goal to just generate cash flow? If my goal is to just acquire this property, get it rent ready, generate cash flow, hold on to it for the long run, get some tax write-offs, deductions, let the property appreciate, and then maybe I'll flip it later, or I'll do something later, or I'll do a heavy renovation later. There are going to be a lot of deals like that where you can just do a cosmetic renovation, but I won't call it cosmetic in the sense of like Property Brothers, because what they're talking about is like, oh, we can go into this property and we're going to do a cosmetic renovation and flip it. That doesn't exist as much. There are some deals out there, but the profit margins are much tighter, and there's less of those. There's a good amount of them, but you have to be more sophisticated. This is what I'll say. You have to be more sophisticated as an investor to go into a property and know what to keep and take out and how much it costs versus going in and doing a gut renovation. Doing gut renovation is more conservative, and targeting deals that need gut renovation, where that can support a big rehab budget and that have that developer spread, that's a more conservative strategy. That's actually the strategy you want to get into first, versus going in and saying, I'm going to keep that trim, get rid of that, do this, do that. Because in order to execute on that type of a deal, you have to understand how contractors think. You have to understand the cost of materials and timelines. Contractors can move much faster. If I break down a job between labor and materials, you will find that the majority of the project, or a very large portion of the project, is labor. And labor can very quickly, and very easily take over the cost of materials, especially if you start doing things like trying to cut corners and try to save things and try to do this and try to make your contractors think through the project. Unless you're going to be standing in the house directly over them, which is what these TV shows are essentially showing you. Is somebody is standing in the house with a hammer, with experience, and they're saying what to keep and what to take and what to do. That's cool, and you could do that. But as you're trying to learn that, you're going to overspend on labor by a mile, and you're going to lose money, and you're not going to make money on many deals until you figure that strategy out. And it's not scalable because it will always require you to stand in the house and decide what gets saved and what doesn't. Because here's what a contractor will do. They're going to run into an issue, and if you're not there, they're just going to stare at that issue for a couple hours, take a coffee break, go think about it, come back to it, then maybe dabble over here, then do a little work over there. They're working all over the place, doing patchwork. Nothing's getting finished. And then they're going to come back to you days later and say, well, I didn't know what to do here, so I just kind of left it. What do you want? No, I do want to fix that. Now you got to do double work, undo some work, redo it. And you're not going to save money because you're trying to save on materials. So you think the cost is materials. So I'm going to save on materials. I'm going to save these things. The materials don't cost that much. The labor costs more, especially if you start bleeding out on labor by trying to play Mr. Property Brothers. It doesn't work that way. So it's much more scalable to set up full gut renovation operations and just say, demolition crew, go. They blow up the house, break it down to the studs. Okay, you're done. Framing crew, go. They frame it. Cool. Electrician, plumber, HVAC tech, rough ends. Cool. Sheetrock team, installation, sheetrock it, zip it up, cool. Paint team, cool. Flooring, finishing. That's scalable. You don't have to stand over that project. So it's a tough lesson to learn. Now, are there deals where you can go in and just rent, what I call rent ready? There's a different philosophy between rent readying and doing a cosmetic renovation. Rent readying is, I'm going to get this thing ready for Section 8. I'm going to make sure it'll pass the inspection. I'm going to put down, refresh the flooring, TLC the cabinets, TLC the bathroom, get it ready for a tenant, not get it ready to be flipped. These are two different stratospheres, right? Get it ready to be flipped means it has to pass the eyeball test. Get it ready to be tenanted means it has to pass the inspection, and it has to be safe and clean and livable and sturdy. So I would take that cosmetic renovation concept and apply it more towards rent readying properties for cash flow, and then playing the appraisal game and like that burst strategy game, versus trying to apply it to like mini flips, because you have to be more sophisticated. You have to have great teams. You have to understand timelines, and you have to know how to work on a bid and on daily labor, and the difference between the two. So you just have, it's not that you can't do it, but your sophistication level has to be higher. So I would say for the average bear, a full gut renovation is safer. You have more budget, less can go wrong, hypothetically, because you're starting fresh, and you can make more money for deal. Guys, like, comment, subscribe. Leave the comment that says subscribe. If you got some value out of that, subscribe, and leave a comment that says I subscribe. And then just leave that comment so I can send you this free training. Roland, just subscribe. You got some value. Dr. Glock, how many homes can you burr per month? I think it's a question of pipeline. So how many deals you can do is a question of consistency and pipeline. So it's the question of going out. It's not how many deals you can burr. It's how many deals can you put under contract in a month? How many deals can you acquire? How many deals can you find that are worth burning? That's your limit. Because the construction is a byproduct of the team, and the team can be scaled. So you could do 20 deals in a month if you had a big enough crew. And depending on the type of deal, full gut renovation takes the time it takes. But if you start teeing up deals, this is what it'll look like. You might, let's say I have 50 properties and they all need a gut renovation. If I start to stage it correctly, send in the demolition team, and I start running teams right behind them, I can run through all those deals in 10 to 12 weeks without permits. With permits, it's going to take a little bit longer because you have to wait, and there's different checkpoints and balances. But you could run 20 deals a month to the finish line at some point, right? Because you're building a pipeline and you're running these teams through. So then for all intents and purposes, it's going to look like you're doing 20 deals a month, because you're showing up to the closing table with the lenders with 20 deals a month. Average deals $250,000. So, that's $5 million worth of deals every month, and they're rolling out the red carpet. But you have to put probably 25 to 30 under contract, because 1/4 are going to die at the closing table. So those are going to get wiped off the board. So you have to be able to put enough deals under contract, run them to the closing, and then stage them with construction crews to run in different volumes and to scale into that. I'm always one to buy more deals than contractors, because I want more food than we can eat. That's real estate philosophy. There's a lot of philosophy in real estate. To get good at this is like becoming a chef. Like, there is a feel for the real estate, for the speed, for the tempo of the game. And you have to develop that. That's why the fastest way to scale up is to start small. Because when you start small, you can develop a feel for the game. And then you can start to accelerate and add volume to that feel. But if you just try to run in and add volume, you have no feel, you're going to lose. Because there are many wrong answers, but there's no right answer. But there are wrong answers. Trying to go fast is wrong in this game. You're gonna bleed out in terms of money, and then you're out of the game. Start small, scale up, get a feel, start to learn some of these lessons. I've already learned these lessons. I've already tried to do cosmetic renovations at scale, and then it's like I should just pick better deals and do full gut. And nobody wants the full gut job deals anyway. The ones that are falling down, nobody wants them. I saw a house today in South Philly, after repair value $325,000. They want 130 for it, but they're not going to get more than 70K, maybe. They really shouldn't get more than 65. Nobody wants that deal. I could put that deal together in my sleep, but I don't even want it really, because they're asking too much for it. And I don't feel like arguing with somebody who's delusional. I'll just wait for them to feel the market pain of not selling the deal, and then I'll step in later and grab a deal like that. But once you learn the skill set of full gut renovation, you become unlocked, because the deal that everyone is afraid of, you can run into and make money. There's an abundance of them. Everything's falling apart. All these cities are over 100 years old. So you rather be in this business versus, you know, everybody and their mom watches HGTV and thinks they're Property Brothers and they're going to run in and do this cosmetic thing. So now you're competing and they're overbidding for the deal because they watch too much TV. And you're in an arena that you don't necessarily want to be in, unless you have the mindset of, you know, I'm just going to go in and do this thing cosmetic and get it rent ready for a tenant and get some cash flow. Can't the title insurance company write an exception to a cloud on the title? Example, a spouse didn't sign up the chain and title. They can. I mean, I've seen a lot of stuff with title companies. It's just a question of risk tolerance. Some title companies are more risky than others. I've seen some title companies do very strange things and take on extreme risk. And then others are like, no, we don't do that. I've taken deals to title companies where they're like, we can't get this closed. And I've taken a deal away, given it to another one. Deals closed in 2 months. So all title companies aren't created equally. You should really be asking for referrals. And that referral should be like, have you had any title companies just really get like some tough deals closed, like some stuff you thought wasn't going to close and then they got it done? That's the type of question you should be asking your realtor or whoever you're getting that referral from, because there are some rock star title companies out there. Title is law. Just like there are cheap kind of run-of-the-mill attorneys and really good attorneys, there are cheap run-of-the-mill title companies and really good title companies that have seen some mess. The national title companies are kind of the best. The ones that deal with the most volume, because they just seen it all, did it all. And they're kind of my favorite to deal with, because I love the title work. I love getting into the weeds, because that education becomes priceless. That's the stuff I try to put a lot of it in the masterclass and then some of my rants, which this is one of my rants. But that's the stuff that you can't get like anywhere. That's the stuff that's priceless. It's kind of that behind the scenes information that you'd have to dig through a Bigger Pockets blog for hours to get to. But yeah, they can definitely do stuff like that. We've been Volckered with these rate hikes. We've been crushed by rate hikes for sure, but it always gets worse before it gets better. I think, you know, I know rates are going to get better. They're going to go down, and it's going to shock a lot of people. Prices haven't really fallen either, because supply is still low. The expectation is that supply is going to increase substantially this spring sale season, which we're headed right into, and it's going to stay high, which is going to drive prices maybe down a little bit, maybe into next year, but not this year for sure. But that's, once again, that's on a macro level. That's not on a micro level. So in some of these micro markets, prices are kind of just stable. Like I say all the time, in the Northeast, prices are just stable, man. And they're not going down. In some markets, they're going up. Parts of Connecticut, prices are going up. Prices continue to rise. So you just have to keep your eye on the market, pick a good market for you, and just stay locked in. Stay tapped in. You could get into a deal right now and you're like, man, rates are 7. By the time you finish the deal, rates are 5.75. Or you start when it's 5.75. By the time you finish, rates are like 4.5. We really can't peg rates. I can tell you they're not going to stay the same, and they're probably not going to go much higher. There is this ceiling, this invisible ceiling of 7%. Once rates go over 7%, people just stop investing, because cash flow is too hard to make cash flow. So a lot of people are just like, I'm out. And once they stop investing, the mortgage applications fall. And then the mortgage companies start to reduce the rates because it's supply and demand. So I don't see them going much higher. I see them going lower. Guys, like, comment, subscribe. Leave a comment that says I subscribe so I can send you instant access to that free real estate training. Show you how to acquire properties for pennies on the dollar all across the country. You don't want to miss out on that free offer. Let's get into more questions. As a new real estate investor, do you think this is a good time to get involved or wait a few months to see if rates drop? Now's the time. Now's the time to get involved. Sitting on the sideline leads to sitting on the sideline. Getting involved leads to getting involved and then staying involved. And that's really the goal, is to just stay locked in. There's always going to be deals. There's always going to be properties hitting the market. There's people doing flip deals right now, making $100K a flip. There's people tapping into cash flow. I just sent somebody a deal today that's a pretty much a full birth strategy deal. It was, you could pretty much put in your money, refinance out, get a lender to finance the whole thing, the acquisition and construction. And what we're projecting conservatively is that maybe $4,000 is left in the deal, and it'll cash flow $500 a month or more, which means you would get all your money out of this deal in 8 to 10 months. And then it's just pure cash flow, tax write-offs, deductions, everything that comes with it, and pure cash flow. I sent this to a guy. He told me, is that really a good deal? I told him, tell me where I can put $4,000 and get $500 a month back, and I'll write you a check. And he's like, that's a good point. He's like, that's a good point. So no, there's still some good deals out there. And that's just sitting on the MLS. And there's actually a bit of an abundance of those, because I found a bit of a hack. But there's all types of plays. You just want to stay locked in. And the best time to learn, even if you're not investing now, everybody should be in a mentorship program, learning the game at a high level right now. Even if you don't have your cash saved. And that was a question that somebody asked me. It was about like saving money and the best ways to do that. But even if you don't have all your cash ready, you need to get more knowledge. You need to stay tapped in. You need to stay locked in. You need to learn the strategies, because the game's not going to wait for you on the flip end either. You're going to wake up one day, rates are going to be going down. That's going to be the news. Rates are going down. Fed just did an about face. They just reduced rates, and people are going to start jumping into the game, and you're not going to be ready, because your energy has been, I'm waiting, I'm just looking. You're going to be just looking when everybody's getting to the money. So you have to get into this game and just stay tapped in, like the full time. And then when the opportunity is there, you'll be right on it. That opportunity, we don't have the crystal ball to say if in 20 days or 30 days, there's going to be an influx of foreclosures hitting the market that nobody really saw. And that happens right in your backyard. And you're just not prepared because you don't have the knowledge. Now you're trying to tap into a mentorship program to learn overnight. And this knowledge is deep. Like if you tap into the 100 Keys Masterclass, you're trying to get a decade's worth of game overnight. And you can, if you really drill down into the information, you're truly locked in. But very few people are. And you would rather have a little bit more time to digest that type of information, because it's like taking a sip from a fire hose. It's a lot of info. The Fed will continue to raise rates to lower inflation. That's the end goal. The banks will be bailed out. Listen, the banks might get bailed out. We just saw a bank get bailed out. And now the question is, will they bail out all the banks? Doesn't this signal to all the banks that you'll just get bailed out too? Maybe, maybe not. Because you got to understand, SVP Bank, they had some pretty big players behind that lost money. You're talking about massive hedge funds. These are people who write massive checks to politicians. For real. That's a different game than if mom and pop get burned by a bank. They might not get bailed out. Maybe they just fall. And you can't really bet on that. You also have to think at scale. So if one bank fails, maybe they get bailed out 150 billion. What if 30 banks fail, 40 banks fail? Where's the limit there? Then you're going to step in with $1 trillion to bail out banks, or are they just going to let them struggle and get absorbed? Because there's two ways to do it. One, you let them fail. Two, you let a bigger bank eat their lunch. They just come in, acquire them at a discount, take over all their stuff, and they have the capital to service it and to make them stable. So you could just let them fail completely and just step out of it. But I think the Fed, what they're going to have to do is stop jacking up rates, because you're jacking up rates to cause a failure that you have to step into solve. It doesn't make any sense. There's no logic to that. We'll see if rates there's no time stopping there. Actually, I would disagree with that 100%. And I would say, tap into more research. They are going to stop soon. They're already decreasing, which is the first indicator that it's going to stop, right? They're not accelerating. We went from 75 basis points down to 50, then it'll go down to a quarter, then it'll go to 0 for a couple months. We're just keeping it steady. Then it'll start to about face. I don't know that you'll see the low 3s anytime soon. That you would be looking at maybe 2 years, 3 years out, maybe 4 years out. So that's not the expectation. I mean, we're pretty much at 7. So the expectation is not to see low 3s like next year. That would be delusional. But rates don't need to go that low for us as investors to make a ton of money. If they're back in really the mid 5s, you're cash flowing. You're on the dance floor. So everybody should keep that in mind. You don't need rates to go that low. And nor should you care. As long as you're cash flowing and you can hold on to properties, let rates do what they do. And there are different rate buy down strategies you can tap into. Tap into my YouTube video on rate buy down strategies if you don't know how. How long should a full gut rehab take for a single family house around 1,500 square feet? Full gut rehabs are 12 to 16 weeks, and then usually a couple more weeks for inspections, and that's if everything is like kind of running smooth. There can be hiccups. Maybe a brick wall collapses. Maybe the sewer line wasn't in the right place, or that collapsed and we got to tap into the street. There's all different types of things that go on in this game that can cause delays and kind of overtime. But in general, you want to think 12 to 16 weeks and then a couple of weeks for inspections. You also don't control inspectors and how quickly they get out the properties. So you don't control that. So, for you guys who are in the 100 Keys Masterclass, we go a mile deep on full gut renovation, the stages, how long each individual stage takes, and general, costs and timelines there. And that's kind of the information you want to get into if you want to master this stuff. How much cost for 1,500 square feet? Depends on what you're doing. This is 3 stories, 2 stories. 3 stories got more windows, more exterior, more paint. It depends on the layout. Is the point. It depends on how many bedrooms and bathrooms you're building. But in general, I would say, it depends on the level of finish and what your quality is, how bad of a condition the property is. If a property's already gutted, I actually like that better than the property that kind of looks better, but I'm going to gut, because it costs me money to take it apart and haul it away and dump it by the ton. So there's a lot of different mixtures there. It could cost you anywhere from $125 to $175. But once again, it depends on what you're building and what condition everything's in. Because properties they can be very similar. This is real life Legos in many ways. But at the same time, what you'll find with some of these properties is, sorry, I just scrolled down. We got a lot of questions coming in. What I find with some of these properties is you could get into them, just like I said, maybe the sewer line collapsed, maybe the brick wall's out, maybe the walls need to be parched. They have the limestone in the basement and it's just been wasting away over the years and it's just turning back to sand. And you need to go in and really do a deep parging of those walls. And that costs more money in the form of time. It's not that the concrete costs a ton, but the labor, that might take them, 2 to 4 days, 4 guys skilled. And, that team is cranking you $1,000 a day. So then it could just run up. Or you could use a cheaper demo crew to do some of the dirty work and then use the more skilled guys. So it depends on how you're playing, the rehab as well. So it depends is the answer. But there are some generalities. And there are ways to look at a deal, make calculations based on the square footage, and kind of back in. Some of the things like sheetrock, flooring, those you can do like square footage calculations. The kitchen, how big is the kitchen? You're doing a big kitchen, a little kitchen. You're doing granite countertops, or you're doing the wooden countertops, the butcher's block. There's a difference in the cost there. Are you doing stainless steel appliances throughout? Are you putting the washer dryer stack? Are you doing the dishwasher? Are you doing the garbage disposal? Are you putting the recessed lighting in? Are you doing the regular lighting? What type of floor are you using? Using the 99 cent per square foot? You doing the 350 with the underlay on it? Like, you have to make a lot of decisions, which is why you need experience or somebody who's done it before, who can kind of help you to build out and plan and budget and understand even the way I build. So if I build the property a certain way in terms of the design, I can build faster than if I do other things like tile everything. Oh, the tile looks nice all the way from the floor to the ceiling. Yeah, but it takes longer. But you have to learn that. You have to blow your money. Well, you don't have to. You can get mentorship. But for the diehard do-it-yourselfers out there, you have to burn money to figure that out. So you'll go out and you'll burn through 50 grand doing it wrong, thinking you're saving on mentorship, which a lot of people say. And I answer that question for people that are like, well, why should I invest in mentorship versus just put that money into a deal? Because you're going to lose. You don't understand the cost of this game yet, which is why you would even ask that question. You haven't lost money yet. You don't understand that wrong decisions or a series of them could cost you 10x the cost of mentorship. Mentorship is a savings. And if you're going to do a deal, it's a guaranteed savings. Because if you don't have the knowledge, you are going to lose the money. You have to pay either way, is the way this game works. There's no shortcut on that. You can shortcut a property. You can leave old windows in the property and shortcut that. But you can't shortcut the game. The game will catch you until you learn. And if you don't learn, it'll make you learn. It'll cost you until you learn. Let me close this door. We got more questions popping. Hopefully that helps. Guys, like, comment, subscribe. If you're new to the platform, like, comment, subscribe. Leave a comment that says I subscribe so I can send you instant access to that free real estate training. It'll show you how to acquire properties for pennies on the dollar all across the country. You don't want to miss out on that free offer. Man, we've been going for like 40 minutes. It's just been flying. Wesley, have you heard of WAA, Women Against Abuse? I have. It's women who need housing. It's government assisted. I guess essentially it's another route to take to get tenants if you want to avoid Section 8. I have heard of it. I have run into a tenant who was in that program. I can't say that I had like an amazing experience. I didn't have a horrible experience, but here's one thing I'll say about the women in this program, and just not the women, but the situation, right? It's a tough situation. I can't count the times where I've had like the ex-boyfriend or the guy gets out of jail, she gets him locked up, but she's got 4 kids. And at least a couple of them are his kids, right? That dude will karate chop your door. He's going to kick in your door. God forbid you have a duplex. He's going to jump through the window. He's going to terrorize your other tenants. These guys are out of control. And they come back. There's almost no getting rid of these guys. Restraining orders they find out where they live because their kids are there. So they're going to find out where their kids are. They find out where the women live. And then they're going to come and terrorize your property and destroy your property. It happens almost every time. So it's a tough situation. You can make money. It is like, Section 8. They will pay like first, last, and security in terms of the rent. They'll pay 100% of the rent for maybe a year. And, they're good people, and it's a good service to help, people who are in trouble situations. But the thing that you have to realize with all tenants is tenants become part of your family, essentially, if you're self-managing. Even sometimes if you're not self-managing. So you're accepting their headaches. And with this situation, these dudes, they're not going away. They will find out where they live, and once they do, you're gonna have a problem. So, but I can send you some info on that. I mean, if you can get somebody good, maybe they're moving from out of town or something, and you could get a good situation. I can only tell you my experience. It's been mostly rough dealing with these guys that are, you know, attached essentially. So it can be really tough. How do we get pricing for your boots on the ground program? You just got to reach out to me. You guys know how to get a hold of me. Shoot me a text, shoot me an email. Get into the boots on the ground program. We're at very limited capacity. We just had 2 more people join boots on the ground this month. It's still March, right? Yeah, this month. And we're just running out of space, guys. So the boots on the ground program, it was one of the questions that we got, which was, can you tell me more about the boots on the ground? This is the program where we build houses for people in Philly. With my resources, my teams, we give you the access to the 100% lenders that are out there that'll give you 100% of the money to acquire and renovate properties. We have a deal analyst as part of the onboarding call. You meet with him. He finds deals for you, helps you to put them under contract, runs all the numbers on them. And we build them. We build them at cost, 100 keys, masterclass style. We can do cosmetic renovations for rent ready. If you're just looking for cash flow, we'll help you to find those deals where you can just do cash flow arbitrage, get an extra $500,000 a month coming in. You can scale up. You can do 5, 10 deals at once if you want to. There's no limit there. And if you want to flip houses, we have plenty of people in from out of the country who are flipping houses to the program. And buy and hold into the program. We have people from all over the country, places like Utah, Nashville, New York, Texas, Carolina, where else? California, a bunch of places all over the country who are tapped into, you know, U.S. real estate and into Philly, 6th largest city. It might have crossed over to the 5th largest city because we have a lot of, you know, influx of people. But we're building them with my A team. And I'm overseeing it. So you get to lean on my decades worth of experience, my 300 plus full gut renovations worth of experience. You get to lean on my A teams and my resources and have me overseeing your project. We pull all permits. We don't play around. So we pull all permits. We connect you with the architects, the engineer, just anything you can think of to get a deal done. We take the guesswork out and we hold your hand through the process. And it is the ultimate learning experience, because now you're actually, I'm building a house for you, and I don't own in that property when we're done, so it's just fee for service. It's a monthly subscription, and you own it. It's for you and your family. If you flip it and make 100K, only thing you owe me is a testimonial. That's it. I will ask you for that and say, look, people want to hear how you made 100K, man. Don't keep that so close to the chest. Let the people know. But, that's it. So if anybody's interested, just reach out. But reach out quickly, because spots this is one thing I cannot do for everyone. I can't even do the one-on-one VIP mentorship that we offer for everyone, because, we've had a lot of people join, a lot of success, and it's, I'm busy. I'm only one guy. I'm busy, right? So I can only spend that one-on-one time with so many people. So as we continue with this boots on the ground program, there's very limited slots, and it's going to fill up. And once it fills up, you just have to kind of sit on the sidelines until the next guy maybe takes a break or pauses, and then maybe you come in on the back end. Charles said, I subscribe. Charles, guys, shoot me an email to Brian at 247cashflowuniversity.com. And let me get you guys some free gifts, some free trainings. 2008 repeated. Not quite. I wish 2008 would repeat. You know what I was buying houses for in 2010, 2011? Did the failed banks overextend? No. The funny part about the failed banks, and we'll jump right back into real estate, is they were trying to be conservative. They were buying bonds. They're like, what's more conservative than buying bonds? They took their excess funds and put it in bonds, thinking it would be stable, not thinking that the Fed was going to quadruple rates overnight. So they were being conservative. Sam Bankman-Fried was being reckless and overextending. Where's the safest place to keep your money? When you really understand money, it's not even, do I have a $1 bill? On your $1 bill, where is it? It's on the back. There's something on the $1 bill that basically tells you this is just a note. It's just a note. Like, the safest place to put your money is in an asset. So people, and not necessarily stocks. I think real estate. The safest place to park your money is into cash flow. So can you take your money, put it in a property, and then that property kicks you off cash flow, which is more money every month. But then it appreciates. It gives you tax write-offs that allow you to keep more money from your job if you're still working in the W-2. That's the safest place to put your money, is in real estate, in an asset, something real and tangible. Not taking paper and going and buying more paper. Even if you're buying stocks and different securities, you're buying more paper with your paper. But it's not necessarily that real tangible asset that has that full use value. And there are successful investors, stock investors, bond investors. But let's think about it. If SVP Bank took $150 billion, and they couldn't do this, right? Because they needed something that could be turned into a cash equivalent quickly, even at a discount for these bonds. But let's say they could take that $150 billion and they had parked it into cash flowing rental properties. What would their problem be right now? Rates went up. We're still cash flowing, especially if they were on a 30-year fix. Who cares? Inflation's happening. Guess what else inflates? Rent. Rents go up with inflation. Still safe. One of the safest places to put your money is in real estate, which is why I told that guy earlier, show me where I can park $4,000 and get a $500 check every month, and tax write-offs, and depreciation, and ghost depreciation, and bonus depreciation, because the tax code was written for landowners and business owners. So show me where I can do this. And he's like, you're right. It's the real estate. Even in 2008, the rent rates didn't fall. Exactly. Rents are going up with inflation. The Fed will create new laws to bail out banks. I don't know. I think you should you should drop a YouTube video and just battle, just lay out what you think your argument is for the Fed and what they're going to do, and pull some articles together and stuff. I think it could be good, but I just don't see it. A brand new 3-bed, 3-bath duplex for $500K, is that too much money? I'm not sure, because it depends on that location, right? If you're in California, maybe not. Maybe that's too little money, right? Maybe that's amazing. It depends on how much it'll rent for. Everything is relative. The brick wall. Where else are we at? Is there a website or place that you could pull a list of private lenders? You mean like private money lenders? Just people. Look, if you want private money lenders, you have to foster those relationships. If you just want hard money lenders that'll give you 100%, the money, I can help you with that. If you want private lenders, like private money, people who just have cash, who are looking to invest in people, they're investing in people. They know that you're investing in real estate and that the real estate is asset backed, but they're investing in you. So the first thing you would want to do before walking that path is create a website and a track record. So you're still going to have to go out, start small, do a couple deals, have some success, have some some proof of concept, and then you could go around and talk to people who are sitting on money. Even people who are just sitting on old IRAs and 401ks, that money could be put into a self-directed IRA and put in real estate. So, you just want to make sure you're marketable first. There is no place where you're going to go and just be like, hey, I want to invest in real estate fresh. Give me the money. Actually, I'll take that back. There are some people who do that, but they want astronomical things. Like I found one guy, and he's like, Brian, I'll lend to people. I'll give them, up to $150,000 to do deals. All I want is, all my money back, 50% of the profits, 10% this. And I was just like, who's doing that? And he had I mean, he had like 5 people who did the deal, and I was like, what are these people thinking? Why don't they just go out and get a hard money loan? It's ridiculous. So, you just want to build a track record. You just want to build a track record. Guys, like, comment, subscribe. Leave the comment that says I subscribe, so I can send you instant access to that free real estate training and show you how to acquire properties for pennies on the dollar all across the country. It takes 3 to 6 months out here to get permits done. Get permits alone. Yeah, it does depend where you're at. In a place like Philly, you can get permits in 20 days. 20 days. You can get your permits in a month. And that's like if I'm trying to blow the roof off or something. If I'm just doing something really smooth, I can get a little faster. And if I want to pay a couple grand to expedite and get those in 10 days, I can. Even if I'm going to blow the roof off. But the city, what you'll find is most municipalities, they just want their money. They'll move faster if you pay them. They'll move faster if you pay them. But you could be in some places, New York, LA, they move a little bit slower. Westy says, WAA probably ain't for me. Sounds stressful. It can be stressful. It can be stressful, especially when you're first starting off. Like when you're just getting started and you have like 2 properties and some dude karate kicks through your door, you're going to be freaked out. Like you're going to be really upset. That money is going to be an aggressive hit to your pocket. You're dealing with the tenant. You're dealing with the drama. You're going to want to go look for this dude. It's just a mess. It's a mess. I'm not saying that every situation is like this. I don't want to badmouth the program or appear insensitive, but I'm really here to protect you guys, the landlords. That's like why I'm here. I'm here to protect you guys from getting burned. And these are my real life experiences. I've had tenants, I think I said it in the last video I dropped, I've had a tenant end up on the news. Like I was watching, I don't even watch the news, I was watching YouTube. And it was like on the XYZ 100 block, the Cecil B. And I'm like, that's my block. Tenant's name, that's my tenant. She's a fugitive. She's on the run. She caught a full-blown body, like right out in the middle of the street, made the news. And I was just shocked. And she had 2 kids, 28, 2 kids, caught a body in front of the house in a very brutal way. So like, things happen. You stay in this game and you do it at volume, you start seeing crazy stuff. That was a Section 8 tenant. But I had some really good people too. I had some really good, Section 8 tenants, and still do. And people are people, but it's not the tenant with the women's program, the Women's Abuse Association program. It's not the women. It's that these men, they don't go away. There is no restraining order that's going to keep these guys from their kids or from chopping your door down. Like it's a different mindset of that guy. Like he's gonna come out of prison. There's gonna be hell to pay. And it just is what it is. If it's your house, it's your house. Was wondering about it. Also sounds, Dame said it sounds stressful. I'm just trying to give y'all the real. So you can't say, Brian told me to get into the program. He didn't tell me they kicked this door down. I told you they kicked my door down. It is what it is, and nobody's gonna do anything because these guys aren't scared of that. They don't care. They live life in that drama. So they're just like, whatever. They move to another spot to kick down the next door. It's not about your door. It's just about they want to intimidate this woman. They want their fear to control, and that's just who they are. And nobody's gonna stop them. Guys, drop more questions. Leave your questions and comments. Like, comment, subscribe. Support the channel. And let me send you that free training. We got more questions coming through. Good deal. Do we still learn the process? I'm not sure what that is in reference to. Oh, maybe that's in reference to the boots on the ground. Yeah, you learn the process. Like, I can't hide the process from you. There's so much transparency in the boots on the ground. We get 2 inspection videos of your deal every day. Everything is tracked in spreadsheets, all receipts, all materials, all labor, everything is tracked. So you actually see how a deal transpires at the top level. You could take the same exact systems from the boots on the ground program and scale 100 property portfolio. Like there is no difference. It's literally not only how I did it, it's how I do it and how I'm doing it and how I'm always going to do it, because it works. I wouldn't create a program to hide information from you. I don't even hide information from people in 100 Keys Masterclass. I don't even hide information from you on this call, on YouTube Live. I'm giving you guys the real answers. So yeah, when you get to the boots on the ground, the difference is when I'm talking, you're going to see it. It's unfolding. And you're going to learn at a much more accelerated and deeper level, because it's game time. It's kind of like sitting on the sidelines, which is why I don't like people sitting on the side waiting for real estate or for the market or for this or that, because the market's always changing. So you're going to wait for the market to change. The market's always changing. So you're always going to be waiting. Getting in the game, that's when you really have to learn. That's when people say, it's funny because people get into the mentorship program and I'm like, tap into the course and learn the knowledge. And I know you guys, it's like, there's the course, then there's like TV, and then a lot of you know, get into the TV. Let me watch The Walking Dead. Let me watch this. Let me watch that. And then it's like, not until people get into the deal and they're like, Brian, how does this hard money work? How does this loan work? And I'm like, go back to the course, bro. I could answer your question here, but I went literally for an hour in the course, in the back cave, a mile deep on this. Go watch it. Then they watch it and they're like, oh, you really did break this thing down. It's like, yes, but now you're in a deal, so it makes even more sense. It doesn't make full sense until you're actually doing it, until you feel like your life depends on it. And a lot of you, that's why you don't have success. If you're wondering why don't I have success in real estate, because you haven't taken that leap of faith into it yet. You haven't really just put it all on the line yet. When you put it all on the line, you'll figure it out. Especially you got me to reach out to. You will figure it out. But you got to go all in. The way out of the 9 to 5 is going like deeper down the rabbit hole of this real estate thing. You got to go in. It's like I'm showing you the way, but you're like, we got to go into the cave. It's like, yeah, we got to go into the real estate cave, because the further down you go, you're going to come out the light at the end of the tunnel. And then once you come out, you're going to know the path through the cave. It won't be scary anymore. It's just going to be, I do this, I walk the path, I get to cash flow, I'll scale it up, I'll get better, and you'll continue to accelerate. So, my man Joey Cahill, let's do it. Thanks for tapping in, bro. Joey is the predecessor. He's like the original 100 Keys Masterclass member. Joey's still in the videos. He did the first ride along. Joey's he's the predecessor of this thing, man. Appreciate you tapping in. Excellent. I'm so happy I'm in the masterclass. Looking forward for my first deal. And I've definitely seen your acceleration. So I'm happy to have you in the course. I've seen your growth. You're definitely growing rapidly. I don't know if you necessarily see it. I think you do, but you are accelerating every week by the questions, by everything, you know, that I'm getting on my end. You're definitely getting there, and you're getting into striking distance to getting your first deal. We're going to make this thing happen. Invest it in real estate. How can a landlord overcome the New York City Airbnb laws? You can't. Have you seen my video Airbnb bust? You can't. That's why I don't preach Airbnb, because there's too many municipalities that are coming out with regulations against Airbnb for me to say that this is a good strategy for somebody to scale into. This is why the 100 Keys Masterclass is powerful, because when we analyze a deal, I got to be able to have a flip exit, cash flow, maybe a rent to own exit, Section 8, room rental, co-living. Like, I want to know everything I can do with this deal. Because I just don't want to get stuck, man. If your only strategy is Airbnb, you can get stuck, because the municipality, somebody can, here's what's going on. And I say this all the time. Who lost money during the pandemic? A lot of money. The hotels. They got shut down. Their whole business model is travel and tourism and people staying at their places. They lost big money. And in New York, they lost buku money, like massive money. They got deep pockets. They fund politicians. They'll get stuff like this written to put more taxes and penalties and fees on the small guy to drive them out of the business and drive the people back to the hotels. And that's what's going on. You can't beat that. You don't have the pockets. You don't have the politicians. You can't beat it. So you need more strategy, or you need to get out of town. Take it from New York, go to Stroudsburg, go to the Poconos, go buy a country home where somebody can go stay there, Airbnb, go snowboarding, skiing, horseback riding, whitewater rafting, create that type of experience somewhere rural where there's not going to be a big body of people who collect to ban this thing. But trying to do it in major cities is real estate suicide. It's just a matter of time until you get hit. Hello, I need hard money lenders in the New Jersey area. Shoot me an email, shoot me a text. Shoot me an email, shoot me a text. Shoot me a DM. I'll get you tapped in. Guys, like, comment, subscribe. Leave the comment that says I subscribe. Mike, subscribe. You guys just gonna let Mike subscribe and get the free training, and you're not gonna get the free training? What are you thinking? Like, comment, subscribe. Do you follow the 1% rule? No. I probably had 150 properties before I even heard of the 1% rule. Like literally 150 properties before I even heard of the 1% rule. And like, Brian, what about the 1% rule? What about it? Here's the rule. There's money going out in mortgage and different expenses and property management fees and maintenance. And there's money coming in rent. I want more money coming in than going out. If I can get a deal with more money coming in than going out, and I can buy it maybe like birth strategy and get most of my money out of the deal, or to the point where I have a very high cash on cash return, over 25%, even though I like to target much more than that. I just sent somebody a deal today with 150% cash on cash return. They'll get all their money year one, and then they just get more money. It's just sitting on the MLS. It's been on the MLS actually 75 days and counting. So no, I don't follow the 1% rule. I just look for cash flow. I just look at the hard numbers, keep it simple. Don't get stuck in rules and just keep it simple out here. 1% rule, it's not going to save you. Cash flow will save you. So just look for cash flow. Look for opportunity, and you'll be safe. Do you recommend doing co-living strategies with a quadplex, 310? Yeah, do it a quadplex, do it a triplex. I was, and I'm not, and I might actually do this in the future, but I was planning a 50-unit co-living, massive complex, man. Co-living is the future. Co-living is the future. It is the out of the box thinking. It is the solution to the affordable housing crisis. It is the path that very few will walk. And those who will make tons of money because you're the true visionary. You're the true inventor of, the new real estate, a new strategy, a new way of life. And there are millions of Americans who are looking for it, who don't know it exists. So you can definitely tap in. How can I join? I don't see the link. I'm not sure what the question is. I'm not sure what you're trying to join. How can I get a veterans rental program? You just got to reach out to the VA. They don't really have like a rental program, but they have veterans with housing vouchers. So you just reach out to them and say, hey, I have properties. I'm a landlord. I'm looking to rent to the VA or to veterans. I do quality rentals, and they'll send people. I got veterans like that. That's all you have to do is call the office. They'll have somebody, answer the phone, talk to them nice, build a relationship, go see them. Bring them some coffee, bring them some Dunkin' Donuts, start a relationship, and they'll put you on the bulletin board. Leave a couple cards, they'll put your information up, and veterans visit the service center. and then they're looking for housing, they're moving. Veterans move a lot because they're just kind of used to that lifestyle, just moving around, jumping around, they're very well traveled people. And veterans like to live near hospitals. And buying near hospitals is a strategy of mine. Even if you're in the hood, buy near a hospital. You're always going to have rental demand. And then if you rent to the veterans, they'll pay 100% of the rent. And then the veterans had the government money. They had the pensions. They had the Social Security. Very good payers. Very good payers. Never had an issue there. Veterans can make great tenants, in my opinion. Usually, a lot of the guys who are veterans, they're like lone wolves. They don't put a ton of furniture in. They don't have a ton of people over. They're quiet. They kind of will keep to themselves. I'm generalizing, right? Not to be like say anything negative about a veteran, but just generally, this has been my experience. And the properties are well taken care of. The bills are always paid. Very few phone calls. Very independent. I mean, if you could start a full rental business just renting the veterans, you'd be just cash flowing and probably one of the happiest people on the planet. In regards to sub 2, if the bank calls the loan, you mentioned you can deed the property back to the seller. Then do you deed it back to yourself when things die down? No, if they call the loan, they call the loan. So you'll always, kind of explain to the seller if the loan gets called, you'll deed it back over to them. And then they would kind of be back into a, foreclosure situation. Very few loans get called from the due on sale clause. So it doesn't happen a lot. But I wouldn't expect things to die down. I mean, you're now on the radar if that happens. Things typically aren't going to die down. So it would just be a deal and you just walk away. I mean, the thing about subject 2 is you're not parking cash in these deals. So even if that does happen, let's say you were in a deal sub 2 and you're in like year 3 now. Well, you're just cash flow positive on the deal. You're not locked in. You don't have money tied into the deal. So if you have to deed it back over to the original seller and walk away, you just walk away. It's not something you want to happen. But if it unfortunately happens, then you deed it back and you walk away. Or you might be in a position where the loan gets called, but the property is appreciated and you can refinance the debt or do something else and keep it. You might want to do that. So you'll always have options. When you're in this game, your job is to improve, get cash flow, boost your credit up. If you have bad credit, great, fix your credit. You fix your credit, now you got a problem. You got to keep it good. It's always a problem. Credit is always emotion. It's either going up or going down. We're saying the same, but it never really stays the same for very long, unless you got like a perfect credit score. But then you got to worry about it. Anything goes wrong, it can only go down, can't go up. So you fix your credit, you put yourself in a position where you can do more and solve problems by doing refinances and doing other things. So you just always are, benefiting, which is why we have sections of the 100 Keys Masterclass that are focused on credit repair. Because it's important. You're a birth strategist. Credit is key. They say cash is king. Credit is king in real estate. Knowing how to leverage it. Only way out is to go further in. The way out is further in. That's the mind hack. You get into a really tough rehab. Most people want to quit. They want to walk away. You know the way out? They ask, Brian, how do I get out? Go further into the deal. Stop looking for the way out. The way out is further in. Get through the deal. Go into it. Calm down. Make some phone calls. Move some stuff around. And finish the rehab. And that's if you're like going through the school of hard knocks. That's how you're going, if you're going through the school of hard knocks, in my sense. Can I get help as a nonprofit to get housing for homeless or low income people? I'm not sure what you mean by help. I mean, there's definitely going to be different programs out there. There might be grants you could qualify for. There's going to be stuff, but it's going to take time. But there's definitely going to be stuff like that. Housing for the homeless can be tough. There are like homeless transition programs, but the failure rate is high. So that's an easy way to constantly end up in eviction court. from what I've seen. That's a good strategy. If you want to do transitional housing for like the homeless, do it all cash. If you're somebody, maybe you have 60 grand, go buy a house in Baltimore for 30K, put 10K into it, and just sit, don't put a mortgage on it. Don't have anything on your back. So then if you get into a position where somebody's not paying, you can just kind of ride it out. But it's not a game you want to play with full leverage in place, because you can get into some situation. Here's what you have to understand. Real estate is not the heart game. Some people want to get into real estate because they're like social workers. And you know, my mother is a social worker, still is. My grandmother is a foster parent for pretty much my whole life. She's been a social worker since before I was born. I mean, a foster parent since before I was born. I come from bleeding hearts. Real estate ain't the heart business. In fact, if you are a bleeding heart and you get into real estate, they will take your heart from you. You will become the Grinch. You will. You won't recognize yourself in a year. So this is not the business you want to get in for that, in my opinion. This is not the business you want to get in for that. Now, if you want to run a business to help this group of people, there's still going to be systems you have in place, and eviction is going to be a part of that process. And running a tight ship is going to be a part of that process. The lower the income that you rent to, like even Section 8, the tighter you have to be. All your rental licenses, you pretty much have to assume the eviction. You have to have all your paperwork together, all your systems together, eviction turning on speed dial. Your lease has to be airtight. You have to have everything teed up to evict in order to be successful. And then you have to try to scare off people who are what I call professional tenants and just want to move into your property and not pay. You have to have a way to scare them off verbally, essentially, by broadcasting that you love to evict and that you're ruthless. And that's not easy for a bleeding heart person to do up front. So then you'll naturally let in the wrong people. And then here's who doesn't care: the bank. They don't care who you are, what profit you are, for profit, non-profit, what your goals are. They want their money on the first. If it's late, more than a couple of months, they're going to come and foreclose on you, shut down your operation. They don't care. So you're going to need a system that allows you to operate successfully, to provide more quality housing and think about the greater good, which you can scale into. And that's going to involve doing a couple of evictions. So it's tough. And I talk to a lot of people. Most of the people who ask me this question, they are social worker oriented by nature. That's kind of what's within their spirit. And I came into this game with a similar spirit, and they'll rip it from you. They'll rip your heart out of your chest. I promise you. By your second eviction, you'll be as cold as ice. And I warned you. Guys, like, comment, subscribe. Brian, subscribe. He spells his name the same way I spell my name. He subscribed. Like, comment, subscribe. Leave the comment that says I subscribe, so I can send you that free training. Show you how to acquire properties for pennies on the dollar all across the country. I need one of those 150% deals. Yes, Rob. Yes, Rob. We need to get you one of those 150% cash on cash return deals. And they're out there. Thanks again for all the value, Brian. You're the truth. You guys tell me who's giving you this much free game on a live. Just tell me. We got another subscriber. Guys, like, comment, subscribe. Support the platform. Support the free game. Support the free game you're getting. Do you ever end up doing that 40-unit apartment deal, or was it no good? I didn't do the 40-unit. It wasn't an apartment deal. I had a 40-unit project that was 40 individual properties in Delaware, and they were scattered site. They were all Section 8, and I just didn't like it. We did the underwriting. I did not like the condition of the properties. There are different mindsets you'll find of property owners and developers. There are people who think the way to get money out of real estate is to not put any money back in. That's the slum landlord philosophy. And what I found when I went down to Delaware was there was a culture of that. It wasn't just like one property owner. It was kind of all of them. All of them were a lot older, and none of them wanted to put any money back into their projects. So they're like, yeah, these properties are real tip-top shape. it's going to look good. I drive down, I get out, I run into properties, and I'm like, these things are done. Like, I got to put, for me, I got to put a 80,000 in each of these things. And then we got back and forth negotiating. And then I'm now looking at, like myself, I'm looking at shells, and I'm just saying, if I put all my energy into these shells, I'm just gonna be better off. I can turn them faster. I can do what I want to do, and it's more profitable, because once you get good at real estate, your only burden is time. Because you guys are talking like, oh, permits take 3 to 6 months. This takes that long. Full renovation takes that long. The only thing you don't have, and you'll start looking at it, is like, man, how many 8-month terms do I have? Like, how many times can I turn a year? And you start thinking about it, and you have to really weigh the value of your time. You're like, man, I'm not trying to even get into some of these projects. So, I didn't do the deal, but it wasn't a bad deal. And for one of you guys, you might have done this deal, and you might have been right to do this deal, but you didn't have 150 contractors, a 20,000 square foot warehouse, a fleet of trucks, and the payroll I had. So I'm weighing different factors. If I was just a lone wolf, oh my goodness, and I did the creative financing play, you could have retired off this deal. Any one of you could have did this deal. It'd been your first and last deal. You would have went to Delaware, signed a contract, and gone to Rehoboth Beach, and you'd have been retired. How much do you know about the CDBG Community Development Block Grant Program with HUD? I would like to start a relationship with the city and pitch the idea of renovating blighted homes. Just go do it. I don't necessarily know about this specific grant, right? But there's all these grants. There's like the Philadelphia has like the Philadelphia Land Bank. Every city, even if you go to Baltimore, and then they'll have something called RFPs, request for proposals. They'll have if you're a minority, they'll have minority grants and minority projects that are only for minority developers as well. There's all different types of stuff out there. It's still about the knowledge. It's still about understanding the process, becoming a master developer, and then scaling. So going and pitching and presenting yourself is a very good thing. You want to build relationships, especially if you're going to be in this game for a long time. Build out your relationships and try to apply for those grants and those community development projects. I've seen some tear down properties in my market. Can you talk about assembling rehab teams? I go a mile deep on assembling what I would call your dream team, your dream rehab team in the 100 Keys Masterclass. But you start off small. I'm going to say the same thing a million times, right? You start off small. How did I assemble my team? I started off, you guys know this, I got burned for 40 grand by a GC. No secret, right? I should make a hoodie that says I got burned for 40 grand. Then I became a developer. And I might. But from that guy who ran off, there were some subs. So I grabbed the subs because they weren't like in on it. He burned kind of them too. So I grabbed the subs and I created a crew out of the subs. It's like 3 guys, and then contractors, no contractors. So we got a plumber, a mason, an HVAC guy, and I just pieced it together. HVAC guy was actually from my rental properties. I became a landlord before I became a developer. So first property I got was a turnkey property, but the heaters blew out in the middle of the winter when I was 2 state lines away, like January 1st, man. And this was the guy that I got the heaters replaced from out of town. So I call him in, he's doing my HVAC, and I'm assembling some people from my rental properties, some relationships I have, and then some of these subs and their relationships. And I build a team. The easiest way to build a team is to start small and to get a deal first, though. You have to get a deal first and then get the team. You don't get the team and then get the deal. But that's all broken down in 100 Keys Masterclass. I mean, I go super deep on this, on how to do that and how to scale it and then grow it organically. But from that core group, that grew to over 150 guys. And then as you scale, some people will get weeded out. Some people are only good at 10 deals a year. They're not good at 20. Some are good at 20. They're not good at 50. some are good at 50, they're not good at 20. So as you level up, you can't take everybody with you. So you kind of have to scale yourself appropriately. But there's a lot to that. I could almost do an hour session on that alone. Kathy said, I'm a veteran and you described most of us correctly. Good. I didn't want to misrepresent, but veterans are some of the, if you just got into the, like I said, the landlord business for veterans, you're just cash flowing. Veterans don't need to be managed, and they don't want to be managed or micromanaged. They just take care of stuff themselves, and they don't want drama, and they have government, money. They have consistent money, and they will live at their means. There's some people that don't want to live at their means and want to live above. Not veterans. That's not typically how they roll, from what I've seen. They're just like, cool. They have their stuff and independent, man. I subscribe. Guys, like, comment, subscribe. Leave the comment that says I subscribe so I can send you instant access to the free training. What's the process on finding a good tenant? I literally just dropped a video called How to Find Good Tenants. It was the last YouTube video I watched. I made. I dropped it 2 days ago. I dropped it on Saturday. It's got 80 views or 90 views or so. It's about to have 91 views. Definitely tap into that. What do you think about building properties on top of mobile homes with existing plumbing? I'd have to think about that. I'm not sure how that would work, but I have to think about that. I'm looking for real estate deals in New Jersey, Pennsylvania. Any wholesalers out there? Guys, if you're wholesalers, I have some, so definitely, but holler at the Fox. If you're a wholesaler, you got some deals, holler at the Fox. On acres of land, you can definitely build on land. We have some people in the masterclass who just do land deals and build ranch home. I'll call ranch houses for the moment, and probably will scale that up. I'm not sure. But yeah, the Fox is subscribed. Definitely, if you're in the Facebook group, definitely reach out to the Facebook group as well. There's some wholesalers in the Facebook group. Cash out refinance or HELOC for long-term rentals. Both. If you have a primary residence where you have some cash in that deal, you have some equity in that deal, you should be doing a HELOC. Unlock that equity. Because if you don't, it's kind of worthless, right? Some people are like, yeah, I'm sitting on my equity, I'm good. But what if the market goes down? So if the market goes down, is that equity really there? Nope, it can get dried up. You should unlock the HELOC now while the market is high, because you don't know what it'll do. And then you can use that HELOC to get in and out of different construction loans, do some BRRRR strategies, put the money back in the HELOC, keep the properties, keep the cash flow. There's so many people in the masterclass that are scaling up their portfolio with that strategy alone. It's the number one strategy. If you don't have a ton of cash, liquid, do the HELOC strategy. Unlock, especially like we got people out in California. Some of you guys bought houses for $300K. They're worth $950. And it's not because you did anything amazing. It's because the market quadrupled. Unlock a HELOC. Unlock a HELOC. Not a home equity loan. Home equity line of credit. HELOC. Mike King, I have a 2-bedroom unit in New York City with a deck. I don't want long-term renters. What other strategies would you recommend? I don't know. If you design this property for Airbnb, it might not cash flow or be much good for anything other than Airbnb. If it's in New York and it has a value, you could sell it, cash it out, and then take that cash and park it somewhere else. New York is not a landlord-friendly place. New York is one of the least landlord-friendly environments on the planet, right? So investing out of town is probably much better, a much safer bet. So selling, don't be above selling, especially if you underwrote this deal with Airbnb and now Airbnb is gone. Oh, the Philadelphia land project. I actually have a call on that on Wednesday. But I'm working to build a low income housing tax credit project, affordable housing units with a super eco-friendly style. And I just want to bring more affordable housing to my city, man. Like, I love my city, and I just love building for the city, bottom line. So I'm teaming up with some people to try to bring this project, and it'll be really good for the community. It'll be really good for the environment. It'd be good for Philly. And if I can bring this project, it'll be the second project in Philly with this type of eco-friendly building. Only the second. University of Penn built the first, and this will be the second. But I'm trying to build it in a pocket of the city that, the first one's in like Center City. Not that I couldn't end up with a project in Center City, but I might bring this one into one of the historically Black neighborhoods, and that'd be cool too. That'd be really cool. And hopefully it'll create some jobs for some young local contractors as well. Put some food on the table. That's what this game's about. This game's not just about you making money. It's about the collective. It's about the whole community eating and making money. Maybe we can put a little fresh grocery store on the bottom. You'll get some density bonuses and developer bonuses for that. But you can really take care of the community. So just pushing, constantly pushing, guys, constantly pushing. And that's the way to accelerate in this game, is to get out of your comfort zone. That's how you keep accelerating. Get out of your comfort zone. Keep doing more deals. Keep going further. Keep learning. Keep pushing. Don't get complacent. Keep doing the work. The reward for good work is more work. It's not vacation. It's more work. So once you understand that, you're just always working. And you're not working not to be done working. You're just working. That's the reward. It's more work. So therefore, love what you do. Because if you understand that the reward for good work is more work, then you'll choose something that you love. Because I'm telling you, that's the reward. That is the reward. Mike Morgan. Hey, Brian is my mentor. I want to say publicly, thank you for being a genuine, transparent developer. I appreciate you. Look, I had one guy, I appreciate it, Mike. I had one guy on a call recently. He didn't join the mentorship program. I told him he's too skeptical. But he's like, oh, people could be paying for, reviews and testimonials. And I'm like, you must think I have like just infinite time to be paying people and creating this massive thing and doing lives and all of this stuff just to like create some scam, man. But no, these are my people. Like they leave the comments they leave. If you could DM somebody who did a testimonial and talk to them privately. I don't even send people questions. If I interview you and say, look, people want to hear your experience with the Boots on the Ground program. People want to hear your experience with the 100 Keys Masterclass. What you think? I just get them on the call and do it. I don't send them questions. I don't prep, because I want people to hear what the people think. Like, it is what it is. Mike's, also early. He's a Philly guy. He's a 100 Keys Masterclass member. He's a developer, and I love building people like Mike, because he can go out and rebuild, neighborhoods and communities and make money for himself, his family, and the community. But that's what this is about. So I appreciate you. Thanks for dropping the comment. What do you think about building new construction residential properties in Philly? New construction can be cool, but there's more permits involved. It can be slower than existing. So there's nothing wrong with it. There's nothing wrong with it at all. But if your goal is to move very quickly, existing structures move faster than new construction. There's more moving parts. Now we go back to that pipeline philosophy. If you build up a pipeline of deals, then now you have a pipeline of deals that you can tap into for this new construction. So you're teeing up permits, and after a while, you'll just have this pipeline. So it'll feel like you're just always doing deals and it won't matter. But when you're just getting started, there is a slower ramp up process, we'll say, and a little bit more capital intensive, because to get those permits and to get the soil tests and the engineering reports If you have to get a variance or something like that, it just takes more time. Please explain a little on how an investor can be good at 50 deals and not good at smaller deals. It's not the investor that's not good. It's the contractors. So contractors, what I found is, as you scale, you can't take everyone with you. Contractors will work good at certain volumes and not good at other volumes. So you might have one guy, if you can tee up 40 deals a year for this guy, he's a rock star. But maybe he's not good at 100. But he's also not your guy for 8 deals because he's too expensive. And those 8 deals, there's not enough savings from the volume to make sense of the guy and the crews. And there's not enough food for them to eat. So now they're running off on other projects and they're less efficient. They're more efficient at 40 or 50 deals when they're just focused on the operation. So there's all these things that you learn. This is why the 100 Keys Masterclass is so advanced, because it is the true knowledge of the scale up. It's not only the knowledge of how to get started on your first deal and invest in real estate and be successful, but it's how do you actually transition that into scaling up an operation where you can do this full time and live off of real estate. And the scale up is where people, like, you have to bleed money. I didn't get the answers from reading a book. I got the answers from going out and losing substantial amounts of money, like over $500,000, over $1 million. And I don't say that to like brag. That's how much money is moving for these through these deals. If you go out and if you went out and got a hard money lender to fund $4 $250,000 deals, that's $1 million. If you've done, I've done over 300 deals. $1 million over 300 deals is not, you could lose 10 grand a deal on 100 deals and lose $1 million because you're making mistakes. And you could afford, by the way, to lose 10 grand on 100 deals if there was 40 grand of profit, total profitability in each deal, and you just bled 10 of it. So you can lose big money, but with the knowledge, you don't have to lose that money. So if I could have saved that and reinvested it, how much further could I have gone? Which means you guys can go further than me with this knowledge. And my goal as a mentor, I'm the proud parent who would love to see you run further with me than the knowledge. Not the parent that's like, that's not for you. You know, I don't want you to be better than me. So that's also a philosophy thing. But that's the explanation. Appreciate the honesty, definitely. Guys, like, if you're still here, like, comment, subscribe. Leave the comment that says I subscribe. Get the free training. Quick question. Is it true that you have to file for permits now to wholesale in Philly? Did I miss you discussing how these banks closings could affect? Yeah, you're going to have to watch the beginning to see kind of the bank talk. We did a lot of bank talk in the beginning. But yeah, you do have to fill out like some paperwork to tap in there instead of like wholesaling in Philly. You could do a deal, but if you start doing like a bunch of deals, you want to get licensed. But this is just paperwork. This is just the city wants to get paid. This isn't like you got to jump through a million hoops. Philly is one of the cities that, like, I love. Like, Baltimore's like this too. You just got to pay. Baltimore's even easier, actually. Philly kind of has an attitude. Like, you can pay them, and then the inspectors are still pissed off. In Baltimore, once you pay, they're just like, whatever. They're like, oh, you did the rehab in advance? Did you pay the fee? All right, cool. I don't care. They just want the money. So you got to pay. You got to pay to win. And you got to pay to play. Does hiring VAs for property management take up more of your time versus hiring a traditional property management? Not really. But training people does take time, especially to train them correctly. Even the stuff I'm talking to you guys about. So I'm telling you, there are wrong answers. There's no right answer, which means there's a philosophy to this game. There's thought. So it's hard to create bulletproof rules. You can do it in property management, but in real estate in general, to say every deal that looks like this is good. No, that's not true. Every deal that looks like this is bad. But every deal that looks like this is not necessarily good because of XYZ and the philosophy behind it. And in this scenario, it could make sense. In this one, it doesn't. And you have to be able to think. And that's what mentorship is about, is teaching you how to think through problems. You have to train people good. The thing about property management is that it's all rules and systems based. So you can lay out a very clear set of rules and systems. And with a virtual assistant, you can control your property management at a much higher clip than you could ever control a property management company with hundreds of clients. And in fact, most people fail because they don't manage the manager. They think they can hire a property management company, and the property management company is going to get 10% of the money, give you 90%, and they're going to care more than you. You don't care at all because they have the property, so you're just off on vacation. They're also off on vacation and not necessarily watching the property. If things will go wrong, it's going to be on you because you're the owner. You should have been watching them. You should have been doing quarterly inspections or asking them for quarterly inspection videos. But if you don't, they won't do it because that's not their real business model. I have to do a breakdown, and I talk about it in 100 Keys Masterclass. And a lot of us, when you're getting through your deals and you're getting close to that property management standpoint, you need to watch the property management section of the course because you need to get into the weeds on it and understand that I've lived through dealing with property managers and having things go wrong, and there are systems, I've created over the course of time. Some of that is VAs, but even if I use a property management company today, which I do in certain areas, especially as you're scaling, it can make sense. Here's the thing with property management. The VA is for after. First, when you're starting, you should get property management. Learn what the property management companies do and how to read them, and then take their systems and then train a VA into it and then transition it at a certain period of time. But don't start necessarily with the VA. You don't have to. You could if you're in a 100 Keys Masterclass because I'm already giving you the systems. But if you're just trying to figure it out on your own and go to school of hard knocks, maybe that's not going to work for you. But yeah, the VAs give you control. The property management company, you still have to manage them. There is no world where you're just like in la la land collecting money. You can do it and it'll go very well for very long until it doesn't. And when it doesn't, it's going to go to hell. And then you're going to bleed out $3-4 grand because you weren't paying attention. And that's a lot of cash flow. Let's say you're cash flowing $400 a month for a year, and then they make a mistake and you bleed out $4 grand, bleed out a year of cash flow. That's no good. What is your why to continue in real estate, and who are your current mentors? I can't break down all of my mentors. I like to keep my mentors private out of respect for them. My why is real estate's changed my life. And I looked up, I built over 250 properties in my hometown, lived the dream. And then I looked up and said, how can I have more impact? What can I do to have more impact? I want to impact more communities across the country. And there's only two ways to do it. One is I can try to do it all myself. But you guys should know that do it yourself is an easy way to burn out. Two is I can go build 1,000 developers and they can go build hundreds of properties in their communities. So I chose option 2, which is another part of my why. My why is in order for me to have more national impact in the communities I need it the most, and to create more jobs and more money circulating in these C-class neighborhoods and economies, I have to create hundreds, if not thousands, of other developers who can go and make millions of dollars within their cities. So that's what I'm doing. That's the mission. And it's a gift that keeps giving, because in educating you guys, I have to remain razor sharp. So it forces me to constantly just be on the leading edge of everything. So it's almost like you guys are continuing to push me while I'm continuing to push you. And you're keeping me sharp and accountable. And then we have boots on the ground where I'm literally building houses for my people and doing all these different things. So it's a gift that keeps on giving. So mentorship has been amazing. And that's why I tell people it's not about the money. And when you join my mentorship program, you're not investing in me, you're investing in you and your education. I already know this stuff. And I'm already out doing deals right now all across the country. You're investing in you, not me. But I'm not doing this for the money, for what you're paying to get into the course. I'm doing this because it's keeping me razor sharp. It's helping me to fulfill the mission. It's helping for me to have more national impact. It's also helping our communities and to rebuild these neighborhoods. And they need more developers like us to go in and do this. So we're rebuilding America. We're rebuilding our cities. And this is part of breaking, generational wealth gaps. This is part of breaking that down, is understanding most wealth in America is built through real estate. Most family wealth is through real estate. So in doing this work and then educating your family, this is how you lift your people up. What cash flow strategy would you recommend for one family, 2-story house in Philly? Thank you for sharing your knowledge. What strategy you recommend for a one family, 2-story? I mean, you could do co-living. You could do Section 8. You could do room rentals. There's so many. I'm not the one strategy guy. So I'm the multi-strategy guy. You got to have several strategies and several exits. You might, for a one family, 2-story, I might say flip it. If it's in South Philly and you can make 80K, flip it. Go make 80K. Take that money, park it in buy and hold deals. Park it in a multifamily building. So it just depends. There's many right answers. To the degree that there is no right answer. There's so many answers. There's only wrong answers. What I wouldn't do is just sit on the sideline and let everybody else make the money. My business partner is one of your mentors, and she speaks very highly of you. She's learned so much since joining your 100 Keys Masterclass. You got to get in too. Don't let her get all the value. Tap into the 100 Keys Masterclass. The mentorship is here. But thanks for sharing. Is the granny units play going to be a good strategy to use? I think the granny units is going to be a good strategy in New York too. But definitely, granny units are hitting the ADUs. Go watch that video on the YouTube channel. Investing in granny houses. It's going to be big. It's going to be big all across the country. Density, that's what's going to change because populations are growing. Places like Philly have people moving out of New York and flocking into Philly, and the density is increasing. And adding on to that is going to be a big play. Now, will it be big in Philly? Maybe. But it will be really big in some of the rural areas directly outside of Philly where there's more land. Then it'll be really big over there. So that's there. Guys, if you're still around, like, comment, and subscribe. Subscribe to my YouTube channel. Leave the comment that says I subscribe so I can send you instant access to that free real estate training. My business partner is one of your mentees. Yeah. Tap in. Rob with this is the last comment of the night. I couldn't even get through the questions I prepared. We'll have to save it for the next time. And we'll have to add on to it. We only got through maybe 1 or 2 questions. Having access to Brian at any time to include one-on-one mentorship with him is priceless. Join the masterclass, hashtag 100 Keys. It's priceless. Me and Rob were talking earlier today. We're trying to work through creative financing deals. We're like in the weeds, and he just joined the mentorship program like a week ago. And we're trying to structure creative financing deals on a $500,000 house. I mean, we're getting into it. He's getting experience. He's on the phone pitching creative financing a week later after joining the 100 Keys Masterclass. For real. And I'm pushing him. I'm like, no, you can do it, man. You got this. And he's getting experience. He's building muscles. Just like you build in a gym, he's building real estate muscles. So for those of you who aren't going through those experiences because you're not in the masterclass, you don't have the knowledge, or you don't have me pushing you and working with you and giving you some of the questions, you're not on those phone calls. So when Rob gets the perfect deal dropped in his lap, and it's a creative financing deal, and he's got the confidence to go and pitch that deal because he's already pitched before. He's already done uncomfortable phone calls before. He's going to eat your lunch. Even if you get the knowledge, you won't have the experience. You won't have the confidence. So that's why I don't like the sidelines. I like getting in there. Get knocked around a little bit. Get an elbow. Get a real estate elbow into the chest. And it'll wake you up. It's better than coffee. And then you go out there, you execute on the deal. So guys, I mean, what can we say? Join the 100 Keys Masterclass. Subscribe to the channel. Stay tapped in. Stay locked in. Reach out. If you want to get in the Boots on the Ground program, you better get in fast, because there's almost no space left. Like, I can't really do this for everybody. I literally can't. Like, I cannot build physically. It's not possible for me to build houses for everyone who wants me to. So definitely reach out, quickly if that's something you're interested in, and just stay tapped in. Like, we got a lot more coming. I appreciate you guys, staying locked in, staying engaged in these Q&As, because people are learning from you. It might seem like they're learning from me. I'm just answering your questions. The questions you guys ask, you guys are pulling the information out. I'm just responding to you guys. So this is a testament to, you guys just being tapped in and locked in, but so many people can learn from your questions, which is why it's so important to do these sessions and have people, tap in and stay locked in. So that's that. If you guys want to get a hold of me, you know how to reach me. We've been cranking for almost 2 hours, so this is the longest one yet. But a lot of game was dropped here, a lot of free game, and there's a lot of free trainings out here for those who subscribe and stay tapped in. So subscribe, stay tapped in, get the free training. Brian Grimes, your real estate mentor. I'm out. Appreciate you guys.